This is Behind the Headlines, with behind-the-scenes analysis on issues affecting Pennsylvanians, sponsored by the Susquehanna Valley Center for Public Policy. Now, here's your host.
Hi, from Philadelphia to Erie and from Scranton to Pittsburgh, it's Behind the Headlines. I'm Charlie Greenewald, Senior Fellow of the Susquehanna Valley Center for Public Policy, and I'm joined as usual by my co-host, Mara Donnelly. Hi, Mara.
Hello, Charlie.
Mara, the other week we talked about the fact that it's campaign season, and it still is campaign season.
It still is.
And
it's never ending.
Oh, we heard these interesting stories about how the Soviets supposedly liberalized and democratized. So we heard that the Russians now have broken into different state Bureau of Elections files. Isn't that interesting?
Oh, that's fascinating.
Now, I didn't hear they didn't break into Pennsylvania yet, but they did break into Illinois.
Oh, my goodness. That's
a
little scary.
Yeah, I guess they wanted to learn more tools, more techniques about how to rig elections, perhaps. I don't know. But, and we'll be speaking of Illinois in a little bit, but we're lucky to have with us today someone who is an expert on Pennsylvania's, continuing to be Pennsylvania's most important issue, and that's economic development. With us, we're very lucky to have Gene Barr, the President and CEO of the Pennsylvania Chamber of Business and Industry. Gene, welcome to the show.
Good to be here. Thanks for the invitation.
So nice to have you. Oh, we're delighted to have you. There's a big news in Pennsylvania. Your organization has merged with the Pennsylvania Business Council, and this is a interesting convergence here.
Marriage.
Yes, whatever term you want to use.
Yeah, this is, it's surprising, and it really does sort of reorder the business forces within the Commonwealth, I guess. Could you tell us a little bit first about the genesis of this marriage?
Sure.
Said?
Actually, the Business Council came to us. This was not a hostile takeover or anything along those lines. They came to us a number of years ago. The then CEO, Dave Patty, and Dave has gone off to do other things, had said, hey, maybe we ought to talk about creating some more efficiencies here. I mean, there are basically 4 statewide business advocacy groups at the time. It was us, it was Pennsylvania Business Council, NFIB, and PMA. And Dave thought that it might make some sense for us to have some conversations about that. So we did. And it progressed. It was on again, off again, up and down, trying to figure out how to make this work. And in the end, I think both organizations came to the agreement that there were just too many efficiencies and too many obvious positives out of putting the 2 organizations together. There's a lot of overlap in membership. We think we can do, and firmly believe we can do, a better job, make more efficient utilization of the business community's resources for advocacy, for education, et cetera. So it just seemed to make too much sense not to do in the end.
But this isn't unusual in the whole scheme of business organizations in Pennsylvania. Some of these mergers go way back. I mean, can you tell us a little bit about some historic perspective on
Well,
this?
They do, and it's almost like it's come full circle.
It's like they break up, they come back together,
Yeah, they do.
break up.
It's kind of interesting. I mean, I spent some time in the corporate world, and it's funny, we went through re-centralization and decentralization. There's always a cycle, and we're kind of a little bit into that as well. And part of this is, of course, as both of you know, the Business Council itself was a product of something called Pennsylvanians for Effective Government, combining with the Pennsylvania Business Roundtable. But even more interesting and even further back, Pennsylvanians for Effective Government was a creation of the business community, including the Pennsylvania Chamber, who said we'd like a political action committee that can go out and maybe take on legislators that haven't been pro-business, but we like to set it up outside the chamber building and outside the organization so that others can participate. So again, this has kind of come full circle again with a reaggregation of some of those entities as well.
So what kind of changes can the business community expect because of this current merger?
I think in terms of what they receive, we anticipate they won't see much of a change of anything.
Okay.
We certainly would hope not. Those things that the Business Council did, particularly in terms of some of their education initiatives, et cetera, we're going to seek to continue. We've put the 2 foundations together. We will at some point in the future probably put the 2 PACs together. But I don't believe the business community will see anything other than a more efficient utilization of their resources in terms of advocacy.
How did you combine the boards, Gene?
Well, what we did was we didn't do a complete combination of the boards. The Chamber has a very large board. We have 58, 59 members of our board. business council had a much smaller, 7, 8, 9 people. So we agreed to take 3 members from their board onto our board, including one onto executive committee, Scott Rogers, who was the chair of that. So Scott will be coming along with Dick East and Bob Scare again at Fleming. We're going to bring both of those in. Dick is with one of the banks, and we're going to bring them over, and they will be part of our board as well. And of course, going forward, there may be more utilization of some board members who were part of the business council as well, because we continually restock the board. People rotate off, people get promoted, et cetera. So we certainly have parts of their organization integrated in. We brought over 1 employee, and things are progressing pretty well.
That's great. Well, what sort of issues are you going to be tackling this fall?
Well, you know what?
In this combined entity.
It's a great question, and we've talked about this before, and it's almost to the point where you kind of get tired of talking about it, but you can't because it's so big, which is pensions. Yeah. Because if we don't resolve in some substantial, suitable way Pennsylvania's pension problems, I hate to say it this way, but it's almost everything else is irrelevant. Because when you're $60 billion unfunded, it's taking 2/3 or more of every new dollar of revenue that this Commonwealth generates and just basically eating the Commonwealth alive. It's what's driving up property. Everyone complains about their property taxes. The biggest problem that you have in that is pensions. And that's driving everything up. And I understand there are some people who say, well, we ought to do away with school property taxes. And look, I don't like my property taxes. But the reality is, whether you spend $1 on your property taxes or $1 on earned income or $1 more on sales, you're not addressing fundamentally what's driving that school funding problem, which is the pension problem, and it is unsustainable. So that is our #1 priority going into the fall.
How well informed do you think your membership is on the pension problem, and how unified are they? And have they agreed, have your members sort of developed a consensus on what's the best way to address it, Gene?
Well, certainly there's a much greater awareness. We have made the decision over the past 12, 18 months or more to put a significant amount of the Chamber's efforts into the pension issue, and the board and our membership is well aware of it and fully supportive of that, as they should be, and as they recognize it's what we need to do. When you get into how do we resolve this, there are clearly some issues. There's some issues relative to what you can legally do in terms of current employees, and there are some issues relative to what makes the most sense moving forward. And there are competing proposals in the legislature as well. And some of those involve going to hybrid systems, some of those involve going to 401ks for all new employees, et cetera. There's even different versions of hybrid systems, not to get into the details, but you've got side-by-side hybrids versus stacked hybrids. And the reality is, we've got a $60 billion credit card debt that we owe those people. There's no question about that. So how do we do that? But the first thing you got to do is stop digging a hole, because just earlier this year, when the public school employee retirement system and the state employee retirement system dropped their anticipated rate of return 1/4 of a point, it increased the unfunded liability by $2 billion. So simply by reducing that anticipated rate of return, that's what you have. So we know that we have to address it, and we know that we've got to begin to take a much, much greater percentage of the risk away from taxpayers, as well as come up with a system that makes demographic and financial sense. We don't have that right now.
Every time we have a guest on and we discuss this issue, which is really frequently over the last couple of years, I think I say the same thing. Fixing the pension system, to me, seems like a no-brainer, and it should seem like a no-brainer to everybody else when you hear the numbers and you hear the impact it's having. If you were a betting man, what would you say the odds are getting something accomplished this fall?
This fall, the trouble is there's a small
Big
number
election.
of days in which to do it.
Yeah.
There's, of course, it's a general election year. And look, part of the problem also is that I think we have to look at this realistically. If it comes down to just doing something to do something for pensions, I'm not sure that we're crazy about that, because you know what happens in this town. If we do something that is nowhere near significant enough, then it becomes, in 2017, oh, we did pensions last year. Yeah. And in fact, the previous fixes now have done very little, if anything, and in certain cases may have exacerbated the problem. So we know that just doing something is not it. What you've got to do is the right thing by Pennsylvania taxpayers. And look, there's strong lobbies against this. State employees, public school employees are adamant against most of the provisions here. And we're trying to work through all of those. But this is the real reality of if we don't fix it, there is a real risk that dollars won't be there for the people who have earned those dollars. And Pennsylvania, along with New Jersey, and we mentioned Illinois, are among the 3 worst states in the United States in terms of this, who have not fixed their pensions. The private sector has. In fact, years ago, when you look at the numbers, 30 years ago, you had the private sector that was like 10% defined contribution, 5% other, and the rest of that was a defined benefit, which is what the state has. It is now a mirror image in the private sector. We have completely flipped that, because the private sector has realized that those benefit plans simply don't work and they're unsustainable. The state needs to make the same decision and take the same actions.
Gene, would it be possible, would it be conceivable for the governor to call a special session of the General Assembly on the pension issue? Seems that this is big enough.
Well, it certainly is. Again, it's the biggest fiscal crisis that we have, and would do it? I don't know. We've got to do something. Whether or not there's enough days left here in 2016 with the days that have been scheduled, I don't know the answer to that, but they've pushed things along to the extent that we think that they probably could. Whether or not there's the ability to do that this fall or not, nobody knows.
I want to make sure we have the time to cover a really, really big issue for you, and that is that you wrote a book.
I wrote a book. Yeah. I did write a book, yeah.
A Civil War Captain and His Lady.
Yes.
Can you tell us briefly what the book is and where can people get it?
Sure.
It sounds fascinating.
Yeah, well, I hope people find it fascinating. I guess that they can let us know that. The best way to describe it, or the quickest way, is if you've seen the movie Cold Mountain or read the book. It's a true Cold Mountain from the Northern perspective. The basic structure of the book is a series of letters between an Irish immigrant, Illinois captain, 17th Illinois Infantry, who enlists in 1861, goes to camp in Peoria, meets a young woman who's 8 years his junior, interestingly. He's 27, she's 19, and they agree to correspond. And it's not uncommon to have soldier letters because people back home would keep them. What is rare is to have the letters from the folks back home to a soldier in the field because they didn't have any way of keeping them.
So both sides of
both sides are there. It's a Victorian courtship. We can actually look through their letters to see what was going on in the war at that time, to see what was going on back home. How was religion driving it? Why did he enlist? What did he think about the war effort? And he went through some pretty horrific battles, Fort Donelson, Shiloh, and Vicksburg. There's also the political stuff, not a surprise given my interest. Her father became the state senator from Peoria during the war, was elected in 1862 when the Democrats had this resurgence because of the way the war was going. He was a member of the Whig Party, turned Republican, turned Democrat, elected in 62 to the Illinois State Senate, hated Abraham Lincoln, would go on the floor of the Illinois State Senate and just excoriate Lincoln, particularly after the Emancipation Proclamation. So you have all of this, look through that, and then I follow all the characters through to the end of their lives.
And where can people get this book?
It's on Amazon.
Okay.
It's at Barnes & Noble, and it's also available through the publisher, savasbeatty.com.
Okay.
And this book project dovetails very nicely with some of your other service. Here in Pennsylvania, you're on the board of the Civil War Museum.
I am.
Here in Harrisburg, and of course we've done shows on that and talked about the whole issue of Harrisburg and its ties to the Civil War Museum. So we thank you for your service.
We have one last thing we want you to get in there. Chamber dinner. When?
Chamber dinner,
Who?
September 26th. We have Michael Strahan's keynote speaker. And the other interesting thing is we're calling it Conversation with the Governors. We've invited the current governor as well as all the former governors. Governor Thornburg is kind of ill and can't make it. But at this point confirmed, we have Governors Ridge, Schweiker, and Corbett attending. We're hoping still to get Governor Rendell and hoping Governor Wolf will be able to join us. Be an informal conversation among all of the chief executives.
Sounds like a great evening.
Yeah, it does.
And we recommend that all of you take a look at buying a ticket to that. We have got to go to our second segment. We'll be right back after this.
Behind the Headlines is brought to you as a public service by the Hospital and Health System Association of Pennsylvania, helping hospitals provide healing, health, and hope to communities across the state. And by the Pennsylvania Business Council, envisioning a commonwealth in which residents enjoy a very high quality of life in sustainable communities. The council works aggressively to define key long-term policy strategies and solutions to make the commonwealth more competitive, creating and sustaining a better Pennsylvania. Additional underwriting provided by the Worrell Corporation Foundation, based in Carlisle, Pennsylvania, by the Edward H. and Jeannie Arnold Foundation, and by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business. Behind the Headlines is also supported as a public service by Daily Express, transporting construction, farm, and industrial equipment throughout the United States. And by Blackford Ventures, LLC, a private equity firm seeking to make significant investments in real estate, proven business enterprises, and their leaders. Find out more at www.blackfordventures.com. And by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Visit pahighwayinfo.org.
Welcome back to Behind the Headlines. On this segment, I'm lucky enough to have with us today the chairman of Susquehanna Valley Center for Public Policy and one of the leading businessmen in the state of Pennsylvania, Mr. Edward Arnold. Ed, welcome back.
Good to see you, Charlie.
It's nice to have you back. Of course, you're the former owner of Arnold Logistics and Arnold Trucking and New Penn Trucking. If there's anyone that knows about business, it's certainly you, and that's why we have the Arnold Report. The Arnold Report, many of you have submitted new queries for Mr. Arnold, so we want to see how you would answer them, Ed. And again, please send in your queries to the email at the bottom of the screen. And if you'd like us to use your name on air, please tell us that. Otherwise, we do not do that. The first question that we have for you in the Arnold Report, this segment, Ed, is a viewer asks, should I change anything about my investment strategy due to the successful Brexit vote? In other words, the people of Great Britain have voted to leave the European Union over the next 5 years. What do you think? Does this change anyone's investment strategy?
The answer in a one simple word is no. That overall, there was a reaction initially. The market immediately recovered because it realized that, number one, this isn't necessarily going to change that much. They don't know what it's going to change, but it's going to take years to change. And in relatively speaking, the pound has dropped substantially. The economy in Britain is doing very well now because the pound is so competitive. So really things are fine in Britain at this moment. Where they will be a year or 2 or 3 down the road, that is something you don't have to worry about today.
Oh, okay. The second question we have for you today is, how can I lower my tax liabilities through my investments?
Well, very frankly, that is very, very difficult to do. Obviously, if you are in a fixed income world, you really should buy tax-free bonds because the yield between tax-free and taxables is so little right now, and of course you would pay no taxes on tax-free bonds. And if you were even to buy Pennsylvania tax-frees, of course there'd be no tax even in Pennsylvania. But that would be the one area. The other area is investing, of course, in real estate. You can use depreciation. The same way with investing in oil, you have a depletion allowance. So therefore, unless you have something where you can create a write-off, depreciation, or invest in the oil allowance, otherwise it's very difficult.
What kind of real estate investments look the best to you at present?
Well, at this point, now again, it depends on the price they're going. Obviously, your strip malls, your things like that, because money is so cheap, if you have good tenants, you can borrow very, very low, and it would work out very well. But again, it would take you to be involved with somebody who really knows what they're doing.
Mm-hmm. Okay. The next question we have is, should I prioritize retirement over non-retirement investing? This is someone who's approaching retirement age and they're concerned about how they're allocating their money. What do you think about that?
Definitely you should. Because obviously if you're close to retirement, that money you have a specific purpose for and you need it. You cannot afford to lose it. So obviously you would be a more conservative, which today is very difficult. What is a conservative investment? But the fact still remains that obviously you would not take risk money. You would not invest what you need for retirement in risk. So yes, you would definitely keep them very separate.
Okay. The next question we have is something that lots of investors wonder about. I've wondered about it myself over the years and don't know if I ever came up with the correct answer, Ed. It'd be interesting to see your insight on this. A viewer writes, how often should I review my stock portfolio?
really, there's two answers. The answer is on a normal basis, you probably once a year is probably enough. However, if you are monitoring what's happening in the world, let's say taken as an example, you own a particular drug stock. Well, if their drug that they were very high on was approved, that's a big reason why you, after it moves up strongly, you may want to consider selling it because it's ahead of itself. At the same time, if the drug that they expected to get approved was denied, now may be the time to quickly get out of it because it's going to affect the fortunes of that company. So really, what is happening in the world in a particular industry, such as the Monsanto, what happened? They had a major drug that there was a challenge to outlaw it, and the challenge failed. So they're successful in keeping that drug. If there's something big happens, you should therefore look very carefully. Or if, again, there's an economic area. If you're investing heavily in Japan, the economic things that are happening in Japan, you'd want to also look at. So the answer is once a year overall, but if there are specific events that would affect a portion of your portfolio, that should be reviewed based on those events.
Okay. Another viewer writes, and this is very much in the news and being discussed by individuals, investors, and public policy analysts for some years now. This question is, what is the best way to invest in gold? How much of my portfolio should be in it? Is 5% still the correct sum for gold investments? How do you feel about that?
Even though gold has moved substantially, with the effort to devaluate currencies, and pretty much every country is doing it by the manipulation of interest rates and so on, that gold, I would think, would be more better at 10% of your portfolio rather than 5%. And there's relatively two ways to invest in gold, in my opinion. Number one, of course, would be to actually own the physical asset, which in the case of junk silver, which you can buy bags of silver that are pre-1965 that are actually had silver in them. And so therefore, they would be recognized as a real currency because it's sort of hard to forge dimes and quarters. So basically, they would be for real. And therefore, in a crisis, they would be very valuable in exchange. Or again, gold coins, but gold coins, because their value is so much higher, it would be more difficult to use them in regular transactions. In other words, if the monetary system collapses, you will need a medium of exchange. Gold and silver will be that medium. The other area you may want to consider if you want to do stocks.
Well, slow down for a second here. Where would our viewers find junk silver to buy? Where do you buy
the same place. If you went into a place, one of these that advertises that they sell gold, they would also sell silver, and they would probably sell junk silver because it is a common method of buying silver.
Now, some folks have been advertising a kit that looks like a little book, but it unfolds, and in it are pieces of a gold bar. They've taken gold bar and they've broken it down into pieces. I don't know the denominations, however. Is that a good investment, Ed, or is it better
I would
to stick
say
with
if
silver?
you're looking at it from a conservative standpoint, it would be weaker in the exchange. If you buy a American silver dollar gold coin, you know absolutely what it is. You have a little gold bar, that would be a strange item, and I would say it would not have the use as easily. So I would say no. I think that's a very bad idea.
I interrupted you a second ago. You were going on
Well,
to...
the second thing is you want to buy gold stock. And the most conservative gold stock, and you could say that's an oxymoron, gold stocks and conservative. And again, they've moved. Most gold stocks have doubled since the first of the year. Basically, there are 3 or 4, maybe 5 companies. Example would be Royal Gold and Wheaton, Silver Wheaton. That these are stocks that they own shares of production of a gold mine. When a gold mine is expanding, they need money. They can't borrow money. They borrow, or this company invests in them, and for that, they give them a guaranteed so many ounces of gold or silver at a fixed price. So as gold goes up, they have no increase in cost. They don't care what the miner does. They have no risk. All they do is they risk an investment, but then their return is the life of the mine. They'll get so many ounces of silver or gold. They're not as volatile as regular stocks. It pays a regular dividend. It is, I think, a good way to invest in gold or silver as a little more conservative than just buying the regular gold stocks.
Okay. Our last question is a two-part question, and this has been in the news quite a bit recently as well. The viewer asks, do you believe that the Federal Reserve will engage in another quantitative easing? And for our viewers who don't know what a quantitative easing is, it's simply printing money, expansion of the money supply. And if they do engage in another quantitative easing, will that affect this person's investments?
Basically, at this point, first of all, it's hard to answer. It seems that at one time, every time the Fed, if they threatened to not do quantitative easing, the market would drop, and if they did quantitative, the market would go up. Recently, the reaction's been different. So it's a little hard to say. First of all, I don't think the Fed will do any more quantitative easing. The first quantitative easing, you could argue, did some good, and it was stopped the crisis. Since then, it's had very little effect, and all it is just diluting our currency, and it really is a very poor policy. I don't think the Fed will do that anymore. In fact, they're right now threatening the reverse. They're talking about raising the exchange rate, which would basically be the opposite of quantitative easing.
Well, if in fact they would do this, how would that affect the person's investments?
Again, the market the other day when they talked about it was actually positive and went up. Normally the market would tend to go down when that's announced. Obviously it is good news, because if they're saying we're going to actually raise interest rates, the economy is strong enough to stand it. So that's a positive. But the market didn't used to react that way. Now they are reacting that way. So
in the last 2 minutes here, the second part of this question is, can we trust Janet Yellen's leadership at the Federal Reserve? Of course, she was appointed, and there was one set of expectations about her leadership, and perhaps those haven't been fulfilled. What kind of job do you think Janet is doing?
I consider that she inherited a very difficult situation. Is she particularly doing a good job? Not particularly. At the same time, she has very little wiggle room. So overall, she should be advocating that there are other things in the world besides manipulating money to keep things. America has gone from a very friendly place to do business. We are slipping hard because regulations. We have the highest corporate tax rates in the world. Therefore, she should be an advocate to say, look, I can't just manipulate money. We have got to become more responsible in the way we manage our business. I'm talking about the laws that we're passing to affect business. Mm-hmm. And so basically, business more and more is using the cheap money to buy back their stock, which makes them look at it, even though they're not reinvesting in their industry, because the government has made it so difficult that there's very little desire to expand your business. So the solution is borrow cheap money, which Yeltsin's made available, and buy back your stock. So most companies are leveraging themselves up very high, which is risky.
Okay, thank you very much, Ed. We appreciate you coming here for another Arnold Report. Viewers, if you have questions, send them in to us. And check us out on Facebook, check us out on YouTube, and the Voice of PA. We'll see you again next week on Behind the Headlines.